Phantom Investor here with another video about the markets and how bad the MACD looks. We're going to look at a weekly chart of the major indices. Here we have the S&P 500, and here is the first recession of the 21st century. And here you can see the MACD, and this is about as low as it gets, about negative 67. Then we go back over to the Great Recession, 2008-2009, and here we get a low of about negative 129. You can see the shape of it, right? And we move further along in time. I forget what this little blip is about. This is the COVID little drop, right? But look at over here. Look at the markets. Markets peaked here, going down. Look at this MACD. It is going down, and it's already at negative 166. All right, let me just put the thing right about there. Look at that line compared to all the other dips. Just the beginning, folks. I mean, let's just look at let's see. Actually, it's better illustrated in another chart, but we're going to continue to the Russell 2000. Again, this is the first recession. Look how shallow it is. This is the Great Recession over here. Okay, we got negative 72. Compare that line to now. Here the COVID drop is still the lowest one, but it is going down. It is almost at the same negative value as the COVID recession. Now let's go to the NASDAQ, which is very telling. In the first recession, which was with a hit to the dot-com industry, or they called it the dot-com bust, the market lost 78% from its peak from March of 2000 down to end of September 2002. So we're talking, what, 2.5 years. 78% drop. Now look at this MACD. It bottomed at about negative 416. And you see right about here is the lowest. And then the MACD drifts up. And the market's still going down and down and down. Just as long as the MACD is negative, it's still going to go down even though if it approaches the zero line. It's not about here till the market changes, right? So it's still going way down even though the MACD is going up. Go over here. Here's the latest market conditions. Here's the peak back in November of 2021, and it's going down. Look at that MACD. Negative 685. Compare that line to the recession, the first recession of the 21st century, even the Great Recession crash. It's hardly a blip in the MACD. Imagine this scenario. Imagine if this started to come back up, like similar to over here, where it just drifts upward, yet the market continues to go south for a good long time. Here, if it drifted upward again from this point, even if it reversed course today, drifted upward, you can imagine in a similar scenario, market price action has a lot more room to go down. I mean, I haven't seen the MACD this horrible on these charts at all. This is really bad. So again, to recap, look at this. I mean, This is awful. S&P 500, awful. Russell 2000. It's trending down at a fast rate. It's about to pierce its previous low. And look at the history of it. Awful. Again, the NASDAQ. And let's pull up the Dow. See what that's doing. Okay, this is the daily. Oh, sorry, this is a weekly. Again, here's the first recession of the 21st century. And the MACD is staying pretty close to the zero line. And here's like a dip here. And, it never gets really out of control. And here's a healthy dip below the MACD on the Great Recession of 2008-2009. Bottomed at about negative 983. If you carry that line over here, right, the COVID dip is far greater, and the dip we're undergoing now has just matched it, and it's still going down. This is not healthy, folks. MACD saying this is not good. This is far from over. Okay, Phantom Investor signing out. Protect your assets.